Pat Walker here with Mission Winners. It is Sunday and once again time to dive into the ETFs and MAXLIST stocks. This is a proxy, IBD 50, of leading stocks. It's just telling us be careful. It also gapped down on increasing volume on Friday on the daily chart. And again, weekly on the left, daily on the right. Let's move on here. Here we go. Gold miners, still kind of choppy here, folks. All right, and you can see it starts to lift up, and then they take it right back. It needs to come across these tops here, and it needs to do it with volume. Until then, be cautious with gold miners. And the ETF, gold GLD, same situation. Look at tail bars. It runs up, and they take it right down. It runs up, and you get a bearish engulfing bar here on volume. What does this tell you? It tells us there's sellers up here. Okay, it tells us to be cautious. It needs to show power through that, and until it does, be careful with it. Biotechnology is dropping here a little bit, and it actually gapped down fairly hard on pickup in volume on Friday. That's institutional selling right there. Tells you to be cautious with biotechnology. By the way, I'm not being bearish. I'm just pointing out what is. It's like saying, oh, it's raining outside. Oh, you're negative. No, I'm just saying it's raining outside. That's all. It's all right. So I just want to put that in perspective. That's important. Oil and gas. I'm negative on this. I had to do it, okay? You got to have a little fun too. You can see on the weekly it's in a downtrend, and it's downtrend on the daily too. It's below the moving averages. Just be careful with oil and gas, okay? Until it shows some power, good to avoid. That's simple. Software gapped down on Friday also on a pickup in volume, and it's below the 50-day. Be careful with software stocks. Let's move on. Medicine's showing a little life here, okay? That's a bad pun, isn't it? Anyway, here we go. Starting to pick up a little bit, but it needs to get above the 50-day, okay, the green line. Now think about this. Why would this be showing some strength? There's a lot of things you don't need, but health is important, and that's medicine, which to a degree is kind of defensive, right? But there's still not a lot of power here, folks. This needs to get through the 50-day. And notice how loose these bars are. Wide and loose bars like this one and this one and this one are indicative of high investor emotions. High investor emotions and good decision making are mutually exclusive, okay? So just be cautious with that. Let's continue onwards. Aerospace and defense was rallying really nicely and got spanked the last couple of days. It's kind of a poster child for the market. The trend is still up, but it's loose right now. You got to be a little cautious with aerospace and defense stocks and this ETF. Let's move on. Home builders had a good run here, okay? Home builders, they like falling interest rates, giving back a little bit of profit taking here, okay? Still above the rising 21 EMA, which is the blue line. But right here, though, there was some selling on the weekly. Little loose here, just tells us to be careful at this point in time. Overall, be careful with everything at this point in time. And that can change in a day or two. S&P 500 growth, look at this. Look at the selling volume here, but look at the selling volume on the weekly. Again, IVW, S&P 500 growth. What are they doing? They're selling it. What does that tell us? Avoid S&P 500 growth stocks. Avoid growth in general. That's what it's saying. And I said this at the IBD meetups for years. This is the 50-day moving average line. And what I used to say on the stage, the air is better above the 50-day. The air is better above a rising 50-day than it is below the 50-day. Good to remember. Let's move on. IWM rallies up, and then they spanked it hard. I mean, heavy selling volume and gap downs. What does this tell you? They want to get out of it. Right now, they wanted to get out of it. Just tells you to be cautious. That's all. It's not the end of the world. It's not the end of the move. Just be cautious right now. That's all they're selling it. Now, real estate's acting okay. You think about this. What's happening with interest rates? And the Fed's talked about dropping interest rates. Interest rates have a direct impact, right, on home building, housing, and it's acting okay. There's no real clean entry here, but you can see if you connect the dots. You want to buy a house. What do you want to do? You want to get a mortgage when interest rates are low and are falling. Same thing's true with this situation. Move on. Transportations, no good. Stay away. That's all, folks. That's like, who's that? Bidi. That's all, folks. Anyway, there's nothing good here. Just leave it alone. Airlines grounded. Leave them alone. That's my dad humor. You can see this. Just there's nothing good there. Leave it alone for this point in time. It will turn eventually, but right now, no, just leave it alone. Here we go. Insurance started to rally up and then it's falling here on increasing volume. Tail bar here, bearish engulfing tail bar, or tail bar, bearish bar on the weekly too. It's above the rising 21-day, but it needs to show some power. So until it does, be cautious. Mid cap, look at that. This is why we do this. Oh, it's doing okay here. You know, gosh, it gapped up and reversed and closed below its high or below its open. That's not good. Oh, they sold it pretty hard here. I'll be okay. Oh, geez. No, this is why we look at charts and let the action, price and volume action, tell us what to do. We don't have to forecast. Just get in line with what is and don't argue with it. What's this telling us right now? Stay away from mid-cap stocks. That's simple. Home builders started to rally up, gave it back. Moral is they're selling a lot of different sectors at this point in time. Now, team, I'm making this video. This is for everybody. I'm making this video on a Saturday. It could change this week, okay? That's why we look at charts. We're always prepared, and we let price and volume action guide us, and that helps us. Falling here needs to show some power, bouncing off the rising 21 EMA. That's something to watch, okay? But it's going to need a good market too. And this is gaps up, reverses up on increasing volume. That's a weekly. They were selling it. Be cautious. Oil services, stay away. There, look at the drop here. We don't have to overthink it. Oh, maybe that's been. No, it's dropping on increasing volume. Avoid it. We have a limited amount of time. Therefore, we strive to use that time wisely in the analysis of charts. Here we go. On down the line, pharmaceuticals, kind of a defensive sector. But even on Friday, it dropped down on a pickup in volume. Trend is still up, okay? Just says be a little cautious. Here we go. Let's move on. QLD falls on a pickup in volume, goes up on a slight pickup in volume versus the previous part, then falls again on Friday. Look at the weekly chart. This is why I love looking at both weekly and daily. Look at the increasing selling volume on the weekly. What does that tell you? Be careful with NASDAQ 100 stocks. QQQ, same situation. Non-leverage. Be careful with NASDAQ 100 stocks at this point in time. Retailing, stay away. I guess we could say retailing's on sale. There you go. Stay away from retailing stocks at this point in time. That's simple. Silver, below the moving averages, stay away from silver. Steel, look at it dropping. What does that tell us? Stay away from steel stocks. By the way, when I do that, team, and this is for everybody, I'm not trying to be cute and funny. I'm just laying it out there. Stay away from it right now. There's no power there. Leave it alone. It's good to know what to look for in order to do things or to avoid things. Semiconductors dropping here on volume. Look at the weekly, increasing volume, selling volume on the weekly. What does this say? They're selling it. Institutions are selling it. Stay away from it for right now. There you go. Spiders rallies up. Big bearish engulfing bar right here on the daily on a pickup in volume. And it's dropping. It drops again on Friday. Look at the weekly. Each week it's falling on increasing volume. Please, again, I stress, I'm not saying, oh, it's the end of the world. I'm not saying that at all. I'm just saying right now, the market's not really conducive to going long stocks. That's all. Could it change this week? Sure. That's why we do these scans. We're always prepared. But at this point in time, just be cautious. Let's move on. SSO, the leveraged one, same situation. Solar is below all the moving averages. Look at the weekly chart. It's been telling you for a long time. I'll shrink this a bit. Watch this. It's been telling you for a year and a half, stay away from me. And have we had any solar stocks? Nope, not for a long time. Continue onward. Small caps dropping hard. Look at that gap down there. This is leveraged one, but it just says be careful with small cap stocks. Oil services below the 50-day. Right here, the green line gaps down again. Be careful with, oh, it's not oil services, oil. Okay, oil. Be careful with oil stocks. Biotechnology was hanging in, but even it gapped down on Friday. Got to be a little careful with that, okay? Just laying it out. Home builders was acting great, falling interest rates, but it's even become a little susceptible to selling. Now, could this, notice this is a good lesson. You see where it opened right there, that little hash mark to the left? And then it fell, and then look at where it closed. It closed above where it opened. It was met with some buying support. What does it need to do? Potential buy, and again, home builders, falling interest rates, connect the dots. Potential buy taking out the highs of this bar. The high on that bar is $112.15. What's it going to need? By the way, what was the other one that we wrote down? The other ETF, nail. See how you connect the dots? It really helps. Systemization makes it easy. No forecasting. They'll tell us what to do. We need to see this lift up here. We need to see a good market and take out these highs with volume from here. Now that would be an aggressive buy. So how do you manage it? If you buy, you go smaller. Good investing is not one size fits all. That'll help you. Good to remember. We go bigger on clean and simple long base breakouts in a good market. And then when it's not, we do less. When things are really sloppy, we sit tight, and that helps us too. Remember this, and I said this at the meetups for forever. What you're looking at right here is a computer monitor of stock charts. Don't let it turn into a video slot machine. I'm not saying that to be cute and funny. I'm just being realistic. Master a couple of simple chart setups. Master them. Make them yours. Do that in a good market and nothing else, and things will get better for you. Materials dropping down here, kind of related to home building. Pretty sloppy here. Big tail bar on the weekly. Just be careful with material stocks. Let's move on. Communication started to go up. It's a poster child for the market. Look at this. Oh, it gaps up, runs up. Boy, this is it. It's breaking out. Oh, maybe not. Maybe not. Look at where it closed. Okay. And then falls again on Friday on a pickup in volume. Needs to take out these tops here, and it might take time. By the way, note, simple tops, nothing fancy, but wide range bars. Look at these swings. Wide range bars indicate high investor emotions and lack of investor commitment to the stock. Oh, it's going up. It's going up. Oh, golly. Oh, wait, it's going up. Oh, whoa. Be careful with that. High investor emotions and good investing, all right, are mutually exclusive. Let's move on. Energy, stay away. There's nothing to do with it. There's no energy in energy. How about that? Financials dropping also. Be careful with that. See that dropping there? That's bad. This, by the way, this is a good proxy for the market, financials. All right. Something to watch, something to be aware of. And it's dropping on increasing volume. Just be cautious. All right. Industrials dropping on increasing volume. Stay away. Technology. Look at this. Look at this drop here on the weekly over here and the daily. And it's been telling us for a while, hey, you might want to be careful with technology stocks, folks. And we have been. Why? We don't forecast, just looking at the charts. It tells us what to do. I think that's kind of fun myself. Consumer staples. Let me see here. Yeah, the market could be bad. The economy could be bad. Things could look really rough. But you know what? I need toothpaste and deodorant. I know it sounds funny, but folks, it's a consumer staple. It's things you got to have, okay? At least I hope you're using them. No, you know what I'm saying. It's a defensive sector, and you see how it's doing? Defensive. That's interesting. That's connecting the dots. Now, what could be a potential buy is if it takes out the highs of this bar here, but it's made a decent move just to get to that pivot. So be a little careful with that. It's a little extended. Here's a good lesson for everybody. Don't chase breakouts. Try to buy close to the pivot or don't buy at all because it opens yourself up to larger risk. Drop it down. Utilities, lifting up here, interest rate sensitive and also defensive. You got to have electricity, right? Lifting up here, okay? Is there a clean entry? It's a little bit extended on the weekly. I'll draw the line to help you. And it's a little extended on the daily, and I'll draw that line too. There you go. By the way, do you notice? Just a simple flat base. It's nothing fancy. And look what it did on Friday. It lifted through the top, and it did it on a pickup in volume. Folks, institutions look at these charts. We look at these charts. We know at Mission Winners, we know what to look for in the charts to make sound investing decisions. There you go. And a tremendous amount of information in price and volume. Now, this is a little extended, so be careful chasing it here, okay? Try to buy, and that's another important lesson. Buy close to the pivot, the clean and simple base pivot, or don't buy it at all. Don't chase price. That's being emotional, not a good thing. Clouds thinking and judgment. Healthcare, kind of hanging in, but a little sloppy here. Be careful with healthcare. Consumer discretionary, this is an interesting one, right? This is discretionary stuff, stuff you don't need, but you still buy, all right? See how it's dropped through here? Tells you, hey, they're being cautious with that section. Metals and mining, no, tarnished. Be careful with that. Dropping on volume, leave it alone. And I'm going to show you a great lesson here. Oh, it's dropping, but you know, it's just a little bit below the 50-day. Oh, it did fall on fairly heavy volume. Yeah, oh, it'll be all right. I'll just stay with it. You know, I don't think it's that bad of a deal. Folks, it was dropping on the heaviest volume. They were selling it on the heaviest selling volume since the first part of June, almost 2 months, right? Heavier volume. And it's like, well, we'll be okay. No, we won't. Let price and volume guide us. That's where we're at. Move on. Oil and gas. Well, there's another oil and gas. What's it telling you? Stay away. Stay away. Don't argue with it. Retailing. What does this tell us? The consumer's pulling in their horns. It's reflected in the chart, folks. Look, and check this out. Here's another example of why we like weekly. Oh, it runs up and tails off. Oh, that's not good. Oh, it runs up near those old highs and they take it down again. Oh, look, it runs up near old highs and they take it down again. Oh, look, it runs up near old highs. I'm not doing this to be funny. They take it right down. What does it tell us? That over here, and I'll draw the line to help you. And again, that's my big passion, is teaching this, how to make money, what to look for to make better investing decisions, and be safer too. There's a seller up there. Till it takes it out, stay away. It also tells us, that was kind of cute when I said a seller, and we're talking about retailers. Be cautious with retailing stocks, not just the ETF, but retailing stocks in general. Here we go. Software's a little sloppy here. Be careful with that. Okay, so that was the ETFs. Now we dive into the MAXLIST stocks. But first, let me ask you, have you hit that subscribe button yet? We noticed that only about 40% of the viewers on our weekly videos are subscribed. If you have enjoyed this video so far, please hit the subscribe button. It is 100% free, and it helps us get more great videos to you. Oh yeah, the like button, also please do hit that. And if you have any questions, leave a comment below. Now let's get into the MAXLIST stocks. Continue on. Here's Apple. It's a green bar. Oh, it's a good bar. Notice where it opened and ran up and closed above where it opened. But note, it closed way off the highs. Up volume, but there was selling in this bar too. And again, you can say, how can you say that? Look where it closed. So what do we need to see? We need to see it. I already have the price alert set. We need to see this take out Friday's highs with volume. Something to look into, something to watch. It's still above the rising 50-day. It's still above the 21 EMA, which is the blue line. Something to watch. By the way, when I do this, please don't think, oh, I'm trying to sell you on the stock. No, I'm just trying to point out, educate what to look for to make good investing decisions. That's all. I want to help. Move on. Amazon. Gosh, I think this one tells you to stay away. And there's a valuable lesson. Earnings. We knew earnings were coming. We knew it for a while. See that bar where it gapped up and closed near the bottom half of its range? It was telling you, be careful. And then earnings come. And in the business, this is called a haircut. Okay? Just says, be cautious. Let's move on. Nothing to do with it right now, okay? It would be a very aggressive entry if it takes out Friday's highs. If you do that, just go smaller. Just Alibaba, It's just sloppy here on the daily. It's sloppy on the weekly. Be cautious with Alibaba. Baidu, same situation. There's no power here. You're not going to see this set up in any chart book anywhere saying, this is what you look for to buy. You just won't, okay? So leave it alone. Google on the week. This was good to us. This was a nice run here on the weekly, and then it's gotten sloppy. We locked our gains in, and we're out. It's below the falling 50-day. There's nothing to do with it. Just leave it alone for right now. Eventually it'll turn, but right now is not the time. There we go. Meta starts to, gaps up. This is why you're careful buying big gap ups too. See that gap up? That was on earnings. Big gap up. Oh, this is it. Let's go. I'm buying up here. And then it does this. Okay. The moral is this. A couple of morals. Be very careful buying gap ups. All righty. And another very important point. Never argue with price. Well, it's Meta. It's gapping up. It's got great news. I'm staying with it. This is going to be good. So you buy it here around 524. And the next day it's dropping all the way down to, we'll call it 480. 524 to 480. That's a haircut, folks. Don't do that to yourself. Another important lesson. When you see a stock gap up, run up, and reverse down and close well below where it opened on a pickup in volume, be cautious with that. Don't own it, okay? Let the price and volume guide you and tell you what to do. And I said this at meetups for years. Never argue with price. Opinions don't pay. Forecasts don't pay. Pundits don't pay. One thing pays. Price pays. And get in line with it. It'll really help you. Let's move on. Microsoft, nothing. Nothing to do with it. Oh, by the way, we owned this in here, okay? And we had some in here lifting off. There's nothing to do with it. We sold it and we're out. We've been out for a long time. Why argue with it? It's not there. Goldman Sachs, hold on, there we go. Goldman Sachs, Golden Slacks. You can see earnings did this. This is why it's important to know the earnings dates. It's good, I'm staying. That'll be all right. Never argue with price. And also, the M and mission winners, the markets, they're sloppy. Telling you, be a little cautious at this time. It's going to change, okay? Please. Bull markets haven't been outlawed. It's going to change. And with these tactics, we'll be ready. You'll be ready. Just follow them. Continue onwards. MasterCard gapped up on earnings. It's an inside bar right here, okay? It's exhibiting strength, folks. I'm not saying buy it, but right now it's exhibiting strength, far better strength than most stocks. Be nice if this farm dependent and then takes off. Something to maybe watch going forward. MasterCard. Not right now. Don't buy it. Netflix. Nope. Look at the red selling volume in here. Look at all those red bars. It was telling you, stay away. We owned this, by the way. We owned this. We bought this here, and we bought this here. It was on the key list. Ran up, starts to stall. We locked in gains. Here's a very important investing maxim. I really mean this. Never let a good profit turn into a loss. Never. Now, I'm not saying, I'm up 50 cents. No, I'm not saying. But gosh, when you've got a good gain here, folks, you're buying this here at we'll call it 660, and it's trading up here, over 690. That's 30 points, folks. 30 points. Don't let that turn into a loss. That will really help you. Also, complementing that thought process, focus on weekly and daily charts primarily. Don't day trade. Please stay away from the 5-minute charts. It's too much emotion there. Just wanted to point that out. NVDA was a great run for us here and here, had a lower high here, and we locked in the gains up in here. Lost the 50-day, we locked in the rest. Done. It's wide and loose now, nothing to do with it. What does it need to do? Take out the 50-day with volume. Until it does that in a good market, stay away. NVDL, same situation. Tesla had a good base breakout right here, and I want to show this to you. This will help you. Again, I want to educate. See that base? It's clean and simple. Everybody sees it. Look at the volume pickup on that bar right there. They voted. We voted too. We bought it. And it works up. This is the daily chart. And it lifts up. runs, we add it to it, sell some into strength, starts to get a little wiggy, sell more, never let a good profit turn into a loss. Take it down here, it loses that trend line on a pickup in volume, that's a sell point, rallies up, then you have a lower high and it starts to drop in here, and you sell some more. Keeps dropping, you sell some more. You lock in gains. Looking at daily charts, that's all. It'll tell you what to do. Gliding in, gliding out. That's simple. No day trading either, ever. Let's see here. Visa, there's nothing here. Here's the weekly, there's the daily. Downward bias, just leave it alone. All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.